Question here from somebody which is, I'm sick of paying so many taxes because of section 24. How can I avoid or reduce those taxes? Watch the video to find out some options. There's a number of things you could do to avoid or reduce section 24, and in view of your question, the first obvious one obviously is to sell your property portfolio. Depending on how long you've had it for and how much it's gained in value, you'll need to consider capital gains tax issues on that. I assume you own the properties in your own name, because, or as a partnership with two or more, and that's why section 24 affects you. So that's one thing. The second thing is you can look at incorporating, to move your property portfolio from your own name into a limited company. Depending on the existing structure, whether it's all properties in your name or as a partnership, there'll be consequences in terms of capital gains tax and also stamp duty, land tax. Both of those could be overcome depending on whether you have a property business or not, and depending on whether you have a property partnership or not. So if you have a property business and you incorporate, you may be able to claim section 162 incorporation relief, which means you won't have to pay capital gains tax on incorporation. And if you're running a partnership business, then if you incorporate, you may not have to pay stamp duty, land tax. So that's your second option. Your third option is you could create a hybrid structure where you have a limited liability partnership and a limited company, and that could help reduce the impact of section 24. Your fourth opportunity is, if you've got the cash, pay off all the mortgages, and then section 24 or the finance, and then section 24 isn't going to be applicable. Your fifth option is find a way, if it's possible, to restructure how much income you get so that your overall income helps you to stay below where there's an impact of section 24, so you don't go into the higher rate tax threshold. That could be an opportunity, especially if you're self-employed and you have a salary or dividends coming in. You may be able to adjust that somehow. That could work for you. So those are some of the options for you to consider. All of them obviously won't work for you, and some of them have significant tax consequences depending on the total gain or uplift in value on your properties. But there are things for you to consider. So you do have options. It's just working out which option works best for you, and then obviously go with that one there.